Hello everyone, welcome to Concept. This is Dharmendra Rajbhar. Today we are going to learn about option strategies, option buying strategies, and we will learn how to trail the stop loss, and we will learn how to mark the target also, and we will use some different technical parameters. We will use the chart patterns. We will also use some indicators. Okay, so let us consider, okay, how we are taking the trade, all right, and what difference we can make, okay, and what are the changes we should make while taking the trade, all right. So yeah, so let me think, okay. There are many ways trader make profit, and there are different trading strategy, okay. So let me show you. Most of the traders, okay, most of the traders, what they do, they use the indicator. They use indicators, okay. There are different indicators, I can say super trend, then I can say MACD, RSI. We will use RSI, okay. Super trend, MACD, RSI. These are the major indicators also, okay. Also Bollinger Bands, okay. So these are the indicators which they use to take the trade, all right. So these are only these indicators are enough? My answer is no, okay. We should use chart patterns also, and also we should use data, okay, and I'll show you how to use the data, and I'll show you how to use the chart patterns including candlestick patterns, and how we can make the trade very simple, okay. So okay, so I'll show you how to take the trade by using the chart patterns, okay. So let's just say this is the levels, okay. I'm sorry, yeah, let's just say this is the level, okay. This will be known as resistance, okay, and this is the level. This will be known as the support, okay. First I'll show you how we can take the trade, okay. Then I will show you how we can set the target, and how we can set the trailing stop loss also, all right. So first to take the trade, okay, we consider resistance and support level, okay. Let's just say the price is moving like this, okay, like this. It has moved like this, then again it has some moves come down and moves down, all right. So here sometimes the price comes down, touches the support level, and it bounce back, okay. So here we will consider some price action plus data, here also we will use some price action and some data, okay. I'll show you how to use the data, and I also how to use the price action pattern, all right. I'll show you on the chart, okay. I'll show you on this chart that how we can take the trade by using the different time frame also, all right. So here sometimes breakout fails, okay, here you can see, and sometimes breakout, it gives you good returns, okay. So I'll show you how to capture those movement also, all right. So this is the setup, okay. I will consider resistance, I will consider support, okay. When the price comes down here, I will use the price action plus data, okay. Here also I will use the price action plus data. It is not necessary that every time my trade will succeed, okay. There are failures also. There is no strategy in this world which is 100% proof, 100% success. There are some failures also. So I will show you that one, that one also, so that you will get confidence that this will be my strike ratio, and this is how I am going to scale it up, all right. So here the breakout is failure, the breakout has failed, okay. Now here again it comes down, so here also I will show you how to capture this move and how to capture this move, okay. Now let me show you the data at this level, how we can use the data and how we can use the price action, okay. So let us consider that sometimes price moved like this, okay, and it has spent some time over here, okay. So whenever there is a support, and whenever there is a resistance and the price is spending some time over there, okay. So we should always consider by using the open interest data, okay. So I'll go to the open interest, all right. So I'll go to track, all right. I'll select open interest, okay. So in open interest, this is a Nifty chart, all right. This is a Nifty open interest, okay. So you can see the green bar and red bar. The green bar represent call option writer strike, okay, and the red bar represents put option writer strike, okay. So whenever the call option writers make their position at the OTM strike of the Nifty, Bank Nifty or any other underlying asset, they have a perception, okay. They are considering that this stock, this particular stock will not move beyond this particular level, and same goes for the put writers also. They consider, they have a perception that this particular underlying asset will not move below this level, okay. So that is why they are making their position at the OTM levels, okay. So while taking the trade, we should always consider this data, okay, because whenever there is a resistance, okay, let me show, whenever there is a resistance, okay, if it is about to break out, I will consider open interest data, because here you can see the bar over here, this is the dark, okay. The dark means there is addition in option writing, that means that particular level is becoming more strong, okay. And if there is a blank bar, okay, that means it is unwinding, okay, okay. The call writers, they are winding up their position because they have a fear that this particular stock might go up. So that is why they are booking their position, they are making losses or booking the profit, okay, whatever the condition is there. So they will unwind their position, okay. That means that level is becoming weak, okay. So there is a greater chances that this particular breakout will be success, okay. Now this is the data, okay, same goes to the put option also, put option writers, okay. If I am going to buy the put option, okay, I will consider at this support level, okay. If it is breaking down, what I'll do, I'll just check open interest and I'll check the put writers which are making the position over here, making their position over here. They are adding up the position or winding up the position, okay. If they are winding up, that means it is giving me green signal that this particular support is becoming weak, the breakout will be success, the breakdown will be success, okay. There are higher chances that this breakdown will be success, okay. So this is the data which I will consider, okay. Now let us go to price action technique, okay. What price action technique I will choose, I will just show you, okay. There are different patterns, okay. Okay. Let's just say if I am going to take the candlestick pattern, and if I am going to take the chart patterns, okay. So in candlestick pattern, most of the time I take piercing and engulfing, okay. Sometimes I take morning and evening star, okay, that will also I will consider. So in candlestick pattern, what I'll do, I'll for put option, that means for bearish condition, here one green candle and one big red candle, that means it is engulfing, okay. Now if one red candle and one big green, okay, so this one will be red, this one will be green, this one will be red, and this one will be green, okay. So here this one will be for bearish, this one will be for bullish, okay. It will be made at resistance, okay. support also when it breaks down, okay, when it is break down, and it is also made at the it is also made at the same level, okay. Sometimes it is made at the resistance, okay, when there is a breakout. Sometimes it has been made at the support whenever there is a bounce back, okay. So this is a candlestick pattern I will choose, okay. Now I will show you what are the other patterns I will consider, okay. I will consider evening and morning star. So that means if I am considering the bearish position, so I will consider evening star, okay. This will be like this, okay. So it will be green, it will be red, it will be either green or either red. Sometimes it will be make like this, okay. It is not necessary that this candle will be doji, sometimes it will be hammer, okay. So this will be the evening star, okay. It is always made at the resistance level, okay, not every time at the support level, okay. So we will consider this particular evening star, okay, this particular evening star at resistance only, okay. Now there will be morning star, that means there will be bounce back, okay. So first candle will be red, okay, then there will be hammer, this will be green, okay. This hammer can be red or green, it does not matter, but this pattern is made at this support level. That means there are greater chances that the price will be bounced back from here, okay. So while taking the trade, let's just say I am going to take the call option buying trade, so I will buy it over here, and this will be my stop loss, and if I am selling over here, this will be my stop loss, okay. So these are the candlestick pattern which I will choose, okay. Now let me show you chart patterns, okay. I will just write it over here. Chart patterns, okay. Many times I use M pattern, sometimes I use head and shoulder. Head and shoulder is like this, the neck below, and here I take the trade, okay. This will be the head and shoulder, this will be the M pattern, and there will be W pattern, okay. I am sorry, yeah, this is a W pattern over here, and I will take the trade, okay. In head and shoulder I will take the trade. If you reciprocal it, okay, so that will be for bullish position, okay, like this, okay. So head and shoulder and this M and W pattern I use for taking the trade while considering chart patterns and candlestick pattern, okay. Now let me show you the data, let me show you the chart, okay, just a minute. I will go to analyze, I will select chart order and trade, okay. So this is a nifty 5-minute chart, okay. So let me show you where I can take the trade, okay. So I have used RSI over here to mark the target, okay. As I have told you that I will show you how to take the trade, how to set the target, and how to trail the stop loss, okay. So here you can see, yeah, let us just say I am taking the trade, okay. So here I will mark the support and resistance, then according to that I will take the trade. So you can see this is the level at which the price is spending more time, okay. So I will mark this as a support level, okay. The price hasn't moved below this particular price, okay. You can see it has spent multiple times over here, okay. Let me move it more, just a minute, yeah. Now, all right. Now here what I will do, I will look for some data, I will look for the price action, then according to that I will take the trade. So here at 24,885, that means 24,900. What I will do, I will select the open interest, okay, I'll just check whether the call writers are exiting their position and put writers they are increasing. Okay, put writers are increasing their position, so that means that particular support is becoming strong, so there might be a bounce back. Okay, so if I'll take the trade over here, okay, if I'll take the trade over here, you can see here also there is a piercing pattern. Okay, but you can see it has moved below, so I will not consider while taking the trade because there is no proper support over here. Okay, the price has gradually came down. Okay, then what I'll do, I'll just check what are the price action over here. Okay, so here I'll check, this is the price action. You can see most of the time it is spending more time over here, so I'll look for engulfing or I will look for piercing. You can see here it is engulfing, also it is engulfing, it is piercing. You can see the size of that candle, size of green candle is greater than the red candle. All right, and you can see the price action also over here. Okay, you can see the price action. Let me show you. Okay, you can see the price is gradually moving up. All right, and you can see every time when it goes down there is pullback, always. Okay, so here also pullback, you can see it is taking the support of this particular level. So what I'll do, I'll take the trade over here. Okay, I'll take the trade over here. I can put the stop loss either over here or either over here. Okay, if I'm taking the trade over here, I can put the stop loss over here. Okay, now this is the trade. Okay, let's just say this is the trade I'm taking. For intraday, what I'll do, I'll select the target. Okay, where if I'm not getting the target, okay, on the basis of this support and resistance, I will make the target over here. This will be my target, first target. Okay, you can see it has been achieved over here. It has achieved over a particular level, that is 2580. Okay, so the 25,000 level it has achieved over here. It has achieved over here. Okay, if I am not getting any particular any particular reversal or any particular resistance, what I'll do, I'll use RSI to set the target. Okay, in RSI this is the overbought zone. Okay, so whenever I have taken the trade, you can see this is the oversold zone. The price has came to oversold zone. So whenever the price is coming to oversold zone, that means I should get ready to take the bullish trade. Okay, I should get ready to take the bullish trade whenever I get the chance. It is not necessary that whenever the price goes to oversold zone, I should take the bullish trade. No, it will be wrong, because many times the price go further down. Okay, so you should wait for the right opportunity. You should wait for the support level. You should wait for the price action. You should wait for the data change. Okay, so when the data changes at the open interest, here I will take the trade. You can see the price action over here. I have taken the trade over here and I will keep my stop loss over here. Okay, now how to trail the stop loss? You can see the price is moving till here. Okay, it is moving here. Okay, moving here. So what I'll do, I'll just shift my stop loss to here at the buying price. Okay, cost to cost, you can say at the cost to cost. Okay, whenever the price has moved at a certain level, here it has moved to 100 points above. Okay, now if my stop loss over here, let's just say 60-70 points. Okay, so I should reduce it to half. You can see I have reduced it over here, and when it has moved to over here, you can see the price is over here right now. I should keep my stop loss at cost to cost. I should keep my stop loss to cost to cost. Now when I see it has moved to nearly 70% of the price, nearly, you can see this is my target and you can see the price is over here, the closing price. So I should move my stop loss to the latest swing, And if you are an option buyer, then you should always consider if the target has achieved like close to 70-80%, you should always keep your trailing stop loss at the latest swing, because in options the option premium fluctuate heavily. Okay, fluctuate heavily. So the profit the profit you are making, it might come down. Okay, so always, whenever the 70-80% target is achieved, always to keep your stop loss to the latest swing, okay, of that particular price, so that you will be profitable at least 40-50%. Okay, so that is how you are going to trail your trail your stop loss. That is how you are going to set the target according to the overbought zone and according to the resistance mentioned over here. Okay, so this is the trade I have considered while taking the trade in the Nifty. Okay, trade in Nifty. All right. So this is the trade I have taken. Okay, just a minute. Okay, I'm sorry. Okay. Yeah. So let me show you if there are any other. Okay. Yeah. So the resistance breakout, you can see the resistance breakout over here. You can take the trade according to resistance breakout also. Okay, I'll show you how to take the resistance breakout. Yeah, here you can see this is the resistance. Okay, I'll just mark it. Okay, you can see this is the resistance. Okay, this is the resistance, and you can see the pattern over here. You can see there is a red candle, and you can see the green candle. It has made engulfing, which I have shown you in the candlestick pattern, engulfing pattern. Okay, and the level is 24,500. Look at the open interest. Look in the open interest. Check at 24,500 level. The call option writers are winding up the position. Put writers are adding up their position. Now the data supports you. Now look for the price action pattern. This is the price action pattern, and take the trade according to that. Okay. Here if I am making the trade, now here you can see the price is already in the overbought zone. Okay, in the overbought zone. So here many times you can see it has moved to it will move drastically on the above side. So always, you know, trail the stop loss, trail the stop loss here. Okay, here what can I do? I will trail the stop loss. All right. So you can see if I am making the position over here, okay, and it has moved to up over here, I will keep my stop loss over here. If I move to like this, I will keep my stop loss over here. Okay, but always set the target. So if you have bought at 24,500, keep the target like if whatever the stop loss you are keeping it. Okay, so if I am keeping the stop loss, I have bought it over here, keeping the stop loss here. Okay, keeping the stop loss here. So always, just a minute, always consider the ratio, always consider the ratio at least 1:2, because here at that particular time, okay, if I am not going to find the resistance, okay, if I am not going to find the resistance based on the previous pricing action, look for the open interest. Okay, look for the open interest. If in open interest, if the highest number of call option writers is 24,700, keep the target at 24,700. Okay, so there are two ways to keep the target. One I have shown, there are three ways. One I have shown you according to RSI, one I have shown you according to the resistance made on the chart, one according to the resistance made in the open interest. There you can keep the target. Okay, and here if you are going to set the parameters, set the target according to risk reward, you can take it 1:2 ratio at least. Okay, so here also you can see my target is around 24,791. All right. So this is how you are going to take the target by using the RSI. This is how you are going to trail the stop loss. I have explained you about the taking the trade. I have explained you about how to trail your stop loss and how to set the target. So this is a session about taking the trade in option buying. All right, by using the concept tool, by using open interest tool, by using the chart patterns, by using the candlestick pattern. Okay, if you like this video, please like and share. If you have any doubts, if you need any clarification, you can call on the above mentioned number. This is Dharmendra Rajbar. Thank you very much.